The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 2nd, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us. Not to us. That's right. When you make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. 877-927-6648, internationally 727-445-1044. Let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Let's Show. Right now, we got the Dow trading up 27 point to Rooney. She's trading out at 20,941. S&P is up 2. NDX 100 up 13%. Russell struggling down 6 points. Semiconductors are off 10 bucks. That's 1%. New York Stock Exchange kind of flat up 13 bucks. Trannies are up 0.5%. They're up 45 bucks. The volatility index up a couple of percent. It's trading down to $10.35. Gold is flat, up a buck, trading at $12.56. Silver's totally flat, trading out at $16.84. Light sweet crude back 51 pennies, trading at $48.33. Leading the charge here to the upside, you've got Marietta Materials up 15 bucks, or nearly 7%. Chipotle is on fire, up nearly 3%, 2.63% to be exact, 12.5 bucks. IAC Interactive up $12 or 14%. IPG Photonics up 8%, nearly $10 out there. To the downside, you've got Heska Corp off 19 bucks or 17%. Spectrum Brands down 8%. That's nearly $12. MedPace Holdings down 9 bucks, about 30% to the downside. FleetCor Technologies FLT down 8, $7.97, $8.04 right now, up 5.4%. But I want to hear from you. I want to know, what do you want to look at? Let's start by taking a look at the markets, the indices. There was a question that came in earlier, so I'll address that here shortly. Actually, there are a couple of questions. But let's go look at the futures indices out here. Futures equity contracts, really what I should be saying. One of the things that I would say is the most important level for us to watch, that's you and I, is really going to be inside the Dow. Now, the Dow has been a kind of a weak link out here as of late. We talked about this yesterday. Most Japanese candlesticks, when you use them, are reversal candles, either bullish or bearish out there. You've got a couple neutral ones, like the doji, yeah, it's neutral. Like the high wave candle, it's neutral out there. And then you have just really two that are continuation patterns, true continuation patterns. We talked about them, those being the rising three, the falling three. The rising three is one that you and I are continuing to watch inside of the Dow. And that would require a close above the trading session out here. This is how I would do it, the close above the trading session from April 25th. You close above either the high, which is 29.67, or the close, which is 29.45. And then what you've got is a continuation. Now, the continuation inside Dow equity futures contracts will take you to 21.106. May bust out that level, but that would be where price would take you to. We do have a new market profile formed a couple days ago. This structure of this profile has a bullish bias to it. And we say that because the point of control where price is trading right now, very comfortable trading there, doing nada, just simply reclining, catching some sun, catching some rays, so to speak, out here, happens to be closer to the bottom box at 20,800. Top of that box is 21,010. So as long as the Dow equity futures contract does not close below 20,800 even, Steven, Everything is good in paradise, and we are here in paradise at TFNN. So that's really the most important equity futures contract really to track. The ES Mini not doing a whole lot, just kind of camped out, hanging out, trying to just to save up the energy to try to get up to the 23.97 level. That's where she's headed. Inside the NQ, next stop is the 1 to 2, A to B equals CD to the upside. We'll likely see that today after Apple reports. That'll take the NDX1, or the NQ, I should say, up to 56.80. You're at 56.38. Should be able to do that in a heartbeat. Well, we've got Apple and we've got Facebook, I believe, after the bell today. Now, there's many out there that think that Apple is going to ring the bell up at the top out there. And all I can say is, really? Well, why is that? Why does somebody draw that conclusion? Now, not that it can't. I draw a totally different conclusion out there, and maybe throughout the morning or the afternoon, wherever we are. I think we're afternoon. Well, if you're on the West Coast, Garo on the West Coast, it's morning. Good morning to you. And we'll kind of talk about that a bit. But in the case of the NQ, take a look. I mentioned Apple out here. You know, I'll get it out of my system. I like that move yesterday inside of Apple. A little bit of volume behind that move, wouldn't you say? Yeah, I would say there's buyers still up here at these highs. Why? Why would there be buyers on May Day? May 1st out there, 33 million shares. Last time we were anywhere near this vicinity was back on April 5th. Only 27 million shares out there as well. Something to think about. Somebody says, there's no volume in the marketplace out here. I beg to differ with you. That doesn't mean that Apple can't disappoint and pull back out there, but disappoint how is the question. How is it that they're going to really disappoint? For those of you that believe they're going to be disappointers out here, how are they going to disappoint? You know, Tim Cook was the ex-CFO, right? He was the chief cook and bottle washer out there. He was the cut, paste, and assemble guy out here. And you don't think that after the Republicans, after Trump took office, after the discussion about tax rates coming down one way, shape, or form out here, you don't think that the chief cook and bottle washer out there was saying to his group, however he was saying it, accrue every gosh darn stinking little expense you possibly can, every one of them, so that we can take those out of the drawers as we need them. Maybe it's going to be in the first quarter. Maybe it's going to be in the second quarter. But I will tell you that they used every tool they could to defer revenue and accrue expenses. They did everything they could to try to go ahead and get down those profits. And last quarter. So this quarter, they've got a lot of nothing like creative accounting out there, and they're going to pull it out when they need to pull it out. They go back and maybe adjust those accrued expenses and say, maybe we didn't need to accrue just all that much out there. This is what all companies are doing. All of the smart companies are doing. And by the way, just out of curiosity, where do you think Apple is in relationship to companies out there that pay the most in taxes? Yeah, they got a ton parked overseas, cash that is, which means that they've kind of not paid maybe some tax. Who do you think? Who do you think pays the most in taxes? Yeah, Apple. Apple. What was it, like $15.8 billion last year? Folks, what do you think a 20% decrease in tax does to Apple and its price of stock?
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're just kind of talking about Apple there. Why do you think that Warren Buffett and group were out there buying Apple shares of stock? Why do you think that they went ahead and pressed that back after the election out there? Now, they know, because he's got a bunch of CPAs. By the way, that's my background that work there. They just simply go take a look at the books and go figure out which companies are paying the most and which companies continue to grow their revenues, grow their profits, are paying the most in taxes, because it would seem to me those are the ones that are going to stand to benefit the most out there. And if you take a look at Warren and group out here, take a look at the windfall this guy is going to get. Not really in dollars, but you've got Apple. We know he's got a big or a decent sized holding inside of Apple. How about Wells Fargo? When John Stump was pulling his garbage out there and the stock was falling and people were thinking, maybe Warren's going to sell or something along those lines. Really? Those people were just nothing more than bozos out there making comments like that. You really think that Warren Buffett was going to sell one share of that stock out there, knowing that they were the number 2 corporation in the United States, paying the most amount of taxes out there, knowing what was coming next? I mean, they paid somewhere around $10 billion. Don't quote me on it, but somewhere right around $10 billion last year. And then you've got, how about Berkshire Hathaway? Number four, as far as guys paying that tax, is $9.2 billion out there. You don't think that Berkshire Hathaway is going to take a big leap to the upside, as well as Wells Fargo? I mean, just the tax benefit alone, just that 20% earnings per share. I think Apple's right around, what are they? Right around $3 and change, right? 3, 20, 30, 40, somewhere right around there. You start taking a look at what a 20% decrease in tax does for it. And it brings that earnings per share down by about 25%. There's 20% in savings in taxes versus you going ahead and taking a look at what it does to EPS out there. I mean, so I posed this question. I've heard people come out and talk about the reason why this market is just simply going to fall apart is because of the earnings per share, the Case-Shiller EPS being out towards levels like around 2000. Stop and think. Stop and think for a moment here. Earnings per share. And oh, by the way, how much stock did Apple buy back last quarter? Do you know? 10 billion or so, right? I don't have the exact number, but 10 or 11 billion. You can kind of quote me on that out there. So they continue to reduce the number of shares that are out there. And they talk about we're not even talking about the repatriation of funds out here. The EPS guys or gals that are out there that somehow have you focused on that are trying to sell you a bunch of malarkey out there. It just ain't so. Just ain't so. We got to go with what it is that we know out here. And so, hey, I can only pray that the market pulls back. I would love nothing more than to see a 10%, a 15%, let's get as large a correction as we possibly can out there. Don't get me wrong. I would love to see that, especially as we get into this unfavorable seasonal cycle. But, folks, you cannot fight this tape out here, and the reasons why are just so evident. They are just so evident with regard to where prices are going long-term out here, folks, longer term. So, and that's the thing. Even if Apple kind of misses some number out here, the real traders / investors will come to their senses and say, that is just a small hiccup. If Apple comes out, they're going to blow away the numbers. They're going to blow away the net income numbers. There's no way that Tim Cook is going to miss on this, when he had all the ability in the world to go ahead and accrue as much as he could and defer as much income as he possibly could out there. There is no human possible way that he is going to. If he does, he should be fired. His Tookus should be out the door if he cannot figure that one out. He's not like he was he's a CFO. He knows how to do these types of maneuvers with inside that company out there. So in any event, I'm going to get off of that high horse, but it's really shared with you for a really important reason out here. Because when you can start thinking, this is what these guys, when I say these guys, the Buffett guys out here, this is what they're thinking. This is the action that they're taking. Don't you think you should take the same kind of action out there? And so turn off that other garbage that's out there that has got you thinking otherwise. And the next time you hear somebody talk about the EPS, the earnings per share figure, the Case-Shiller index being too high, it's like driving a car. I promise you, if you drive with me in my car, you're going to be safe. Because I'm looking forward, and I got all mirrors set so I know exactly what's going on around my car 360 degrees out there. Those guys who are giving you this Case-Shiller stuff forgot to look forward as well as what's really going on around them. Okay, let's go take a look at some things that were requested, such as gold. Had a nice conversation earlier today. Oh, we've got Tom from Phoenix. Tom, thanks for calling. Thanks for holding. You wanted to talk about Apple. How can I help you?
Just a question on their taxes. Even though the tax rate is 35%, I see that most companies never pay that. And according to Google, it looks like Apple paid 18.3% in 2015.
26% last quarter. In the last 10K, the effective rate was 26% for Apple.
Okay, so is that high? So
yeah, versus like General Electric, who hardly pays any taxes. But on Apple, yeah. So I mean, a big tax bill, $16 billion basically is what they paid in taxes. I don't have the breakdown between state and federal, but $16 billion is what they paid their last 2016 fiscal year 2016.
So if the tax rate goes down to 20%,
yeah.
Do you still anticipate everybody will have the same deductions to even knock it down far less?
In a corporation, yeah, there really aren't any loopholes. When they talk about this loophole thing, they're really talking about guys like you and I are the Schedule A guys. When they talk about loopholes, there's no such real loophole in a business. You're running a business, you have a business expense or you don't. So they're going to have all the same expense structure out there, let alone, what they've been talking about. I've heard some things floated here by Mnuchin and others about to really get the capital markets going, taking that depreciation schedule and kind of throwing it out the door and letting you depreciate nearly 100% of your investment. Now, some companies may not want to do that, quite frankly, but if they do things like that just simply reduce or increase the expense, so to speak, and therefore you've got higher net income where you're paying effectively lower out there, that whole earnings per share thing just simply is a huge wide berth and spread out there. I mean, it is I can't guarantee anything, but I do believe, Tom, that is one of the single reasons why Buffett and Group have been all over Apple.
Okay, thank you.
Okay, you bet. Thanks so much for calling. That was Tom in Phoenix out there. And it's a great discussion. I think if I can get each of you to focus on this, you have to anticipate that this is going to happen. Who doesn't want tax breaks? It doesn't matter what political affiliation you're with. I know you want it, and your neighbors want it, and their neighbors want it. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go check in on basically the metals market out here, which means, as you know, you and I, we're going to start with taking a look at the yen, get a feel for what is doing. This is the monthly chart. Let's go change this here to a daily time frame and get a better feel. So we can see that the yen continues to inch its way higher. Let's go take a look at the retracement levels, see where we're at here. Usually there's a pause at about the 0.382 retracement level, and that's of the Gartley buy pattern. That is where we are at. And you can see that we just hit at that here today. So we're at the 112.15 level. If we go ahead and turn on our market profiles, you can see that this is going to indicate to us we may have a bit higher to go, about 112.55. And that is really the level you want to see, because if there's a close above 112.55, that's going to tell you and I that the lid on any rallies in gold and silver or the 30-year Treasury is going to really be capped out here. Whereas price is running into resistance. The normal pattern would be right around now inside the yen at the 0.382 retracement. You would get people that would be getting off of the elevator, so to speak. You'd see some kind of retracement to set up an A to B equals CD to the upside out there. In other words, set up a Gartley sell pattern. If price just continues to move through it, there's no bearish reversal signal that forms. And if price gets above 112.55, then sweet 618, that's the sweet for TFNN. That is where price will head to, 114.64. I don't know which one is going to occur until we see a bearish reversal signal. You have to go with the trend that is in place as we speak right now. But if we want to take a look at a very interesting set of patterns that are out here, let's go with the thought process that we're going to see the yen stop right around now at the 112.55. Overnight, I would say, is when we would be taking a look at that. Then what does that do for metals out here? And it's really, we're kind of at that precipice point when we take a look at gold measured in three different currencies. Perhaps three most important currencies out here, although the folks that are taking like a gold price in rand might disagree, or Great British pounds might disagree, or loonies might disagree, but we can always get back to those guys. But if we take a look at the top panel of this chart, that's gold priced in yen. Center panel, gold priced in euros, probably the most important. And then at the bottom, you got gold priced in U.S. dollars. If you take a look at the longer-term rising trend line, that is the green diagonal line, lower left to upper right out here, you can see that in each of these cases, the bull trend thus far is still in place for gold priced in each of these currencies. Yeah. If we take a look at gold priced in yen, it actually bottomed right around October 7th, 2016. In the case of gold priced in euros, it was December 23rd, a little Christmas present out there. And in U.S. dollars, right around December 22nd. Now, that's based on a closing price, not versus the intraday spikes, highs to lows out here. And in this case, I just really like to look at the closing price, and I've eliminated a lot of the noise inside of the market. So we still have a bull market, what I'll call intermediate term, in place for gold priced in these currencies here. The trend has not been broken. I'm watching the euro as the one, so I'll go ahead and just simply explode that one. And by explode, I mean that in a nice way. This is the one that I'm really paying attention to. I'd like to see the yen get out there and spike that, the top of that box. I'd love to see the euro, gold price in euros, actually get down to test that rising trend line. You too can do this at home, by the way, and then hold. That could be the spot where the actual next buy in Goldilocks would go ahead and form. Now, if in fact it doesn't happen, if the euro busts through, if the yen busts through its resistance zone, how will that impact the gold price in euros? Well, we'll just simply have to take a look at gold, certainly priced in euros, but it won't necessarily be good for gold priced in dollars. That's for sure. And if we were to see gold priced in euros break this trend line, that would not be a good thing. So as we speak right now, still looks pretty good. I just don't think we are there just yet with regard to finding a bottom. I think we just still have to be patient. But it is worth noting, it's interesting to watch these patterns come together, and now we'll see how things play out. If we do take a look at gold itself, we take a look, hey, are there any kind of reversal signals here? No, not a darn thing. More likely than not, gold priced in dollars is going to make a detour down into the 12.37 level. And that's only $20 from where we're trading right now. So I'd love to see a nice swift move down there, and it's at that 12.37 level as we speak right now. That is the spot where you would be looking to perhaps, and I say perhaps in the right circumstances, look to go ahead and get along Goldilocks. In the case of silver out here, yesterday's ascent has slowed down. But if we take a look at where this little guy could fall to, it's a dangerous thing out here because there's no reason for this not to get all the way back to the lows from back in 2016. $16 is still game inside of silver. You talk about being at the precipice. Well, it's below the old precipice out there, meaning the swing point from March the 15th. That low was $16.89. It needs to get up above that quickly out here. Otherwise, this thing will just go ahead and make a 100% move of the larger move that is out there. So maybe it's overdone. I don't know. It's in dangerous territory out here, that being silver. So that's what's going on inside the metals. That's what's going on inside of the Japanese yen out there. And those are things we want to go ahead and pay attention to. July. I don't have July up there. Yeah, I've got July up there. What you talking about? I got July. I got the end contract up there. So we were looking at it. I'm sure that's what, yeah, we got it. So we're in good shape out there. If we take a look at light sweet crude, let's go take a look at light sweet crude, see what it is doing out here. If light sweet crude is going to turn, well, if it was going to turn, you'd see it close about 49.35 out there. That's the bottom of its market profile. The nice thing about 49.35, well, both the bullish and the bearish side. 49.35 happens to be the bottom and the center of the box out here. And so the bad news bears out here is that once price got below 49.35, any time that it's tried to get up above that, it has failed. That's how strong now that is a level of resistance. So anyone that's bullish light sweet crude, you've got to see a close above that level. If you're a seller of this, sell every $49.35 move that you possibly can. But this is also making a 100% move. What I mean by that is getting back towards either the swing point from November in 2016, 47.60 to 46.25, or the swing point in March, somewhere right around the 47.58, 48.84 number out here. So possibly nearing support, but still none really, none that we can hang our hat on. We know our resistance is. It's at $49.35. So we've got the Dow up 25, S&P is up a couple points, NDX up 10. And when we get back from this break, I'll check the emails, see if anybody has sent in requests. Otherwise, let's go take a look at some individual stocks out there. Stocks like Chipotle, Martin Marietta, IAC Interactive Corp, as well as, Spectrum Brands, Charter Communication, Lear. I'd say we go take a ride on Lear Corp out there. Let's go fire up our Lear jet. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Yeah, that tax nut, that's a big number out there, right? We know there's $2.5 trillion or so worth of money overseas. Just the top 30 U.S. companies. I'm just talking about just the top 30 U.S. companies out here in 2016 paid approximately $121 billion in taxes. That's only 30. All right, that's just 30 companies. That's not dealing with the Russell 2000 smaller companies out there. It's not dealing with other S&P companies out here. Just the top 30 entities, U.S. companies, paid $122 billion or so worth of taxes. So 20% of that, $25 billion out here. You know, it's not a small number. But the most important aspect of that, for those that believe that who follow that chart, that the earnings per share is we're just too stretched out here. Wrong. It just does not get simpler than that. Just absolutely wrong. There is a lot of room to run when this whole thing gets reset out there. And all the big boys and girls on the street know this. I want you to know that too and prepare for it. And I'm not suggesting you go out there and buy the market right now. That is not what it is that I'm suggesting that you do. I am suggesting that you do buy the next dip, the next bottom that takes place. That I'm absolutely suggesting that you do that. I've got a question here about some gold miners. One is BTG. Let's go take a look at BTG. Which one is that? B2 Gold out here with regard to possible Gartley pattern. So if we go take a look at it, any Gartley pattern is going to have a to B equals CD. So we'll just immediately go ahead and draw that in. And what you and I want to do is we want to become the masters of that C to D leg out here. And what I have done and spent my time identifying and understanding was when you get that A to B equals CD pattern, why do some of these not work at the one-to-one level? Or how do you know when an A to B equals CD pattern has completed? And that is basically understanding how the market talks, walks, and squawks to you and I. The way that it confirms a pattern is giving you a bullish reversal signal. Unfortunately, as we take a look at BTG right now, it's not in place. There was one. It failed. There is no other bullish reversal signal as we speak right now. So would I go ahead and buy this as a Gartley buy pattern? No. I would wait for the cavalry to arrive on that one. Another one, DRD, is the ticker symbol. Let's go take a look at that. It's DRD Gold. Really the same kind of thing. We'll see the A to B equals CD pattern. This looks like this is going to turn into a butterfly, meaning that we're already beyond the lows out here from November 14th, which was out at $3.70. You're at $3.85 right now, so we're not really below. We're testing that swing point, so that's cool. 540,000 shares was tested yesterday with 468 today so far, 163. I would still wait for, in this case here, this equity, I'd wait for a sign of strength, let alone a bullish reversal signal. You got GG. So let's go take a look at Goldcorp, because that one's really impacting the GDX more than the other two. So if we look at the A to B equals CD pattern in this, we're going to start with the swing point on February 16th as the A. The B is 314, meaning not price point, but the trading session, and the C point March 27th. We have a ways to go before the A to B equals CD pattern completes on this. Needs to get to 1297 or thereabouts. You're at 1374 as we speak right now. So that could be a good setup as long as we see some type of nice bullish reversal signal. Inside of Goldcorp, there's just nothing here that says now is the time to go ahead and buy. And the last one is GORO. That is Gold Resources Corp. In this case here, this would have to be a butterfly, and you'd be looking at an expansion of swing points out here. That expansion being from the swing point of December the 15th, from that bottom to the high out here on the trading day of February 17th. So you can see that we are near a 1.272 expansion. You hit it yesterday. Today could end up being a bullish reversal candle if it can close above yesterday's doji close, which was $3.26. You're at $3.26. Needs to be $3.27. I don't know how this one here moves. I can see the A to B equals CD down, but this one would be a potential butterfly buy. I'd sure like to see the rest of the sector give us that same piece of news, because otherwise GORO, G-O-R-O, is going to head to about $2.16 out there. Question came in and said, can we look at Melly? You bet. Watermelon out there. Let's go take a look at it. M-E-L-I. That is Mercado Libre. This is for Peak D in the den out here. This has had a nice move. Tell me what you're doing. Peak, are you in? Are you out? Buy? Sell? You're just kind of checking it out, is what I assume out here. So let's put this on a little bit longer term chart out here and go take a look at its pattern, because the last swing point for the A to B equals CD to the upside, that took place the week of October 10, 2016. 6.6 million shares there. It was not passed with volume. At no point in time, once price got above that, does it have the volume. Does that mean that it won't complete the A to B equals CD to the upside? No, it does not. It's just you like to have a confirming signal, and on a weekly basis inside of Mercado Libre, you don't. But you had a big enough bearish reversal signal at the 193.58 that once that level failed to hold as resistance, it was telling you, okay, you can go ahead and flip sides of the trade out here. So on a weekly basis, where is Mercado Libre headed to? Looks like about 258.37 out here. If we go take a look, let me go populate one of my other charts out here, the weekly. Let's go put it up here, see if there's anything to be paying attention to, such as maybe a Tom to Mark count, price moving higher, doing less relative energy. Nah, I don't see anything on the weekly chart for Mercado Libre. On the daily, let me go ahead and put that. The daily chart, price is moving higher, doing it with less relative energy, so to speak. But and then there is a potential seventh wave move out here. So Peak, even though Peak, you're only focused on D's, you know that Stevie-san likes to focus on G's. He likes the singing in the key of G out there. And if we take a look at the trading session out here, right about February 25th, and we start doing our wave count out there, you can see that this thing is in a potential seventh wave move. The other side is that, well, maybe because it was one of those Basel instant restarts out there, you're really only in the third level. Nonetheless, price moving higher, doing less relative energy. What do you need to see in order for this thing to suggest that it's going to pull back? Well, you'd have to see it close below Stevie's red line. That's 231.58. You can see how that has held as support. So do I see would I say to sell this? Absolutely, positively not. Nada. no way. This is a nice momentum stock. Would you buy it? No, I would not buy it here. Where I would buy it, though, a nice little pullback into that Tom DeMark support line right around 217. That would be a place that I would most certainly be looking at for Mercado Libre out there. And 217 lines right up with the top of the weekly box at 216.70 out there. So that is what I would be looking at for Melancholy, MELI. Again, the Dow's up 26. The S&P is up 2. NDX 100 up 10 buckaroonies out here. It is going to be a beautiful bull run because the next time and we may have started. Yeah, buying that bottom after. The reason that subscribers and I went into the NDX 100 of all of the sectors out there, who pays the most in taxes? You think it's the Dow, the S&P as a percentage basis, or the NDX 100? Something to think about. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. While we were going into that break here, light sweet crude just kind of blew apart a little bit. It's down about 22.5% right now, trading out at 47.66. So we were talking about it earlier, it being light sweet crude. And so as we take a look now, we can see that in essence it's trading. It really is or should be coming into a level of support. Is it here at 47.65, or is it down at 46.25, or is it at the hammer candle back on August the 1st between 46.87 and 46.69? That I don't know. There is nothing out here on any time frame that I can go to really to identify some type of bottom as we speak just yet. Here are 4 different time frames that you're looking at: 60-minute, 240, and then the daily and the weekly. If I go ahead and take the 60-minute though time frame and turn it to a 10 as an example, you can see the volume spike in this here. When you see those volume spikes, you got to remember that sometimes at those volume spikes, it's the professionals that are in there buying, right? It does not necessarily mean that's it, it's over. You want to pay attention at volume spikes out there, especially when you're coming down into support. I can see the horizontal support when we looked at the daily time frames out here, but there's no new profile, there's no new nothing with regard to the 10-minute out there. We do see a big move volume-wise, but one of the trading, especially when you get down into the intraday time frames out there, 2-minute, 3-minute, 4-minute, 5-minute type charts out there, you want to be watching those volume spikes, and you want to be looking for other patterns that might complete out there because there are 2 sides of the trade. And in this case here, I like to look at both sides of the trade. You know that. I will change the narration of the story that I provide to you when the charts provide us with a different narration. It is really that simple. Yes, I have skin in the game. Absolutely. But just because I have skin in the game with regard to a trade doesn't mean that I'm willing to not take the other side of that trade out there. But today has been a little bit more about the bigger picture out there. And that's really what last week's workshop was about, was it not? We talked about how to spot the next bear market. It really was for all of you, every single participant here at TFNN, because there's not a one of you that doesn't have some long-term funds that you're managing wherever they're at out there. And so it's just so important to have that bigger picture. And I want you to have that bigger picture with regard to what is going on out here, with regard to what's going on, with regard to what's being proposed out there, what's going to be worked out. Gary Cohen is an intelligent guy. Okay, just as Mnuchin is, just as Trump is, okay, and the group that he's got around him. Don't think that there's not going to be any tax cut. Don't think that there's going to be something that comes out, and I think it's going to be rather significant. And quite frankly, what is being discussed is bigger than any quantitative easing program that you have seen out there. So don't think that it's going to be the Fed that's going to blow it. The reality is, here's the amazing thing. You talk about kind of like this Ben Bernanke, and they call him Helicopter Ben. And is it possible that these guys really sat back and sort of knew what was going to take place out here, that they actually designed this whole thing? Because it's going to be pretty simple to reduce that balance sheet if they want to out here, and to be able to have it absorbed by the market. QE4. Man, you and I, we're living in it now, and it's going to be all at one time. All at one time. It's going to be one heck of a ride to the north. Steve Rhodes with TFNN. Have a great day, folks. We'll see you on Wonderful Wednesday. Stay tuned. Your favorite polar bear of mine, David White, is up next. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.